I often get asked the question from newer investors, if you could only hold on to one long-term ETF position forever, what would it be? And although my answer to this is not necessarily the correct answer, and this is because my investing goals, risk tolerance, and outlook is going to be different from the next. But that being said, I still do have a certain ETF in mind which I would choose, if I in fact for whatever reason could only choose one ETF to hold on to forever, and this would be the SCHD ETF. Now in this video I'm going to explain why I would choose the SCHD ETF as my one and only holding if again for whatever reason I was only allowed to hold on to one holding. And also at the end explain a big purchase of SCHD that I have planned in the up and coming days. Now we are going to go through all this and more. Right after you please drop a like on this video and subscribe for more content like this in the future. Now some of the questions that get tossed around a lot on the internet, in the stock market investing side of things of course, are questions like what are your top holdings, what is your favorite stock, or what is your favorite ETF? And although at first these types of questions might seem a little bit simple and surface level, I do happen to think that these type of questions asked to a seasoned investor, or someone that's been investing for several years, let's say 5 years or more, I do think that the answer that the investor would give to the questions like this could be profound. Now my most obvious reasoning for this is that if someone were to have asked me questions like this at the start of my investing journey, which was around 7 years now, I am certainly going to give a much different answer, and my answer today is going to have some depth to it. But now the reason that I would choose SCHD as my one and only holding for an ETF is because of several reasons. For one, the ETF strategy, the ETF's performance so far, although it hasn't been around all that long compared to some of the other popular ETFs out there, and of course SCHD's strong dividend history and dividend growth. But before we go any deeper, let's talk a little bit about what the SCHD ETF actually is. SCHD, also known as the Schwab US Dividend Equity ETF, is a popular exchange-traded fund that aims to provide investors with an exposure to high-quality US dividend-paying stocks. The fund is managed by Charles Schwab Investment Management and seeks to track the performance of the Dow Jones US Dividend 100 Index. The Dow Jones US Dividend 100 Index is comprised of around 100 companies that have a history of consistently paying dividends, a track record of strong financial performance, and a history of raising dividends over time. Now the ETF has gained some serious popularity over the past years, and this is largely due to things like the dividend focus. The fund focuses on dividend-paying stocks, which can be appealing to investors that are seeking income-generating assets. Also, the fund is very cost-effective. The management fee is low, the fund is well-diversified, and the dividend growth is insane, but we're going to go through all that and more in a second here. SCHD is currently up 173.43% as far as ETF price appreciation. So that's exactly how much the fund has appreciated in price since around October of 2011. Now the fund's 52-week range is 65.96 on the low and 79.49 on the high. So still trading currently a little bit closer to the 52-week range low, which is why I'm planning on making a massive purchase soon. So make sure to stay tuned for that also. Now one of the main reasons I would choose to hold onto this ETF rather than others is because of the fund strategy, how it chooses its holdings. And of course with my personal risk tolerance, the diversification would definitely help me sleep well at night. The breakdown is as follows. Industrials 17%, healthcare 15%, financials 14%, technology 13%, consumer defensive 13%, consumer cyclical 9%, energy 8%, communication 4%, basic material 1%, and utilities under 1%. Now SCHD has a very strong list of top 10 holdings if you were to ask me. We have companies like Broadcom, Pepsi, Cisco, Merck, the Home Depot, Texas Instrument, Coca-Cola, Chevron, Verizon, and Pfizer. Again, the basic strategy of SCHD is to pick companies with a strong financial background and companies that pay and grow dividends over time. Now speaking of dividends, this is one of my other favorite parts of this fund. SCHD currently has a trailing 12-month dividend yield of 3.71% and has paid out $2.64 over the past trailing 12 months. Now, if you look at this ETF's dividend history, you can tell one thing's for certain. They have been consistently paying dividends quarterly for quite a few years now, and also been raising their dividends substantially over time. And so far since this fund's inception, there's been times within just a few given years where the dividend has almost doubled. Now, the fact that SCHD does pay a strong dividend and has for several years now is very important to my individual investing strategy. My specific investing strategy is to acquire more and more high quality assets, which can of course be individual stocks and or ETFs that not only pay a dividend on a monthly or quarterly basis, but also has a strong history of doing so, and of course lastly, a history of raising their dividends over time. Because years from now, if you're getting paid more and more consistently from the assets that you purchased years ago, that's only going to make your wealth snowball larger and larger, quicker and quicker. And again, for me personally, this is just my strategy. I really favor cash flow. I dream of building a portfolio where all the dividends from all the different stocks and ETFs to be able to cover my bills and really cover whatever expenses I want to have in the future. So an ETF like SCHD definitely has the ability to do so. Now, another very important aspect of holding onto a long-term investment like SCHD is going to see how the fund has performed since inception. And of course, what the return has been like. So if we were to use the metric total return for SCHD and the S&P 500, year to date, SCHD is still down quite a bit, down 5.08%, which in my humble opinion thinks there might be a buying opportunity here still, where the S&P is actually up 13.11% year to date. Over the last year, SCHD is still down 5.74%. S&P 500 is up 4.59%. Over the last 3 years though, SCHD's returned almost 41%, which is definitely significant, just trailing the S&P 500 at 46.17%. And over the past 5 years, SCHD has pretty much stuck with the S&P 500, returning just over 67%, where S&P returned just over 70%. So a lot of you might be asking, okay, well, if the S&P has a better track record as far as total return than SCHD, why would you not just buy into the S&P 500? And of course, the answer to this is, in reality, being diversified and having some of both would be obviously ideal. But just for the thought experiment of being able to only invest into one ETF, like the original question was, I think that buying into something like SCHD that does give off more starting cash flow, for me personally and for my personal strategy, would be a much better component to my overall portfolio than something like the S&P 500 would be. Now lastly, the obvious reason that I would choose SCHD as my only ETF just for this thought experiment would be because of the dividend growth history. Now, dividend growth calculates the annual average rate of increase in the dividends paid by a company. And as we can see here, historically speaking, SCHD in 2012 paid around 81 cents USD for the whole year of dividends. 2013, around 90 cents. 14, 105. 15, 115. 16, 126. 2017, SCHD paid $1.35 per share per year. 2018, 144. 2019, 173. 2020, 203, 2021, 225, 2022, it paid $2.56, and of course, so far in 2023, the year of dividends is yet to be determined. But as we see right here in the chart, an investor that bought into SCHD years ago is getting paid more and more year after year for just holding on to that same simple ETF they bought long ago. And of course, the idea is that if you were to extrapolate and just go off of the previous dividend growth rates, you can see that in the future, SCHD could most likely pay much more in annual dividends than it did historically. Now again, this is exactly what can really supercharge your portfolio and allow your money to really work hard for itself. Because not only are you holding on to an ETF that has a history of capital appreciation, but also a history of raising their dividends over the past 10 years or so. Now lastly, I promised you guys I was going to explain my future plans in a big purchase of SCHD I'm going to make soon here. Because of a recent liquidity event, I'm planning on buying around 1,000 shares of SCHD. So if you want to follow along with that and see that purchase, make sure to subscribe to this channel. Lastly, I want to hear what you guys think down below. If you, for whatever reason, were only able to buy into one ETF and hold that ETF forever, which ETF would it be and why? If you enjoyed this video, make sure to please drop a like on the video and subscribe for more. Thanks as always, guys, and I'll see you in the next one.